Hey there, this is Michelle Rene with Windermere Coeur Realty, and I'm here with Leslea Williams, and you're with At Home Lending. I'm going to let you introduce yourself in a sec, but I just wanted to put out there that we are getting together and we're going to give some awesome quality information for people who are self-employed and looking at getting a home loan. So,
Good stuff.
yes, I'm so excited. So, um, I'm going to just kind of jump into some of the questions.
Absolutely.
Before we do that, though, can you give a little background on who you are? Just share with people if they don't know you already. We're here in the Coeur d'Alene market, North Idaho,
Yeah.
specifically. But yeah.
Yeah. I am Leslea Williams, and I've been a mortgage broker for over 20 years. Started in California with a custom home builder and went into business development for them, training loan officers. So lots of deep background. I've been in retail, I've been in direct lending, and have not left brokering since 2005. So now I
Nice.
own a brokerage in North Idaho.
North Idaho, we love. So I think a lot of these things would be applicable to people wherever they are. But for me, I'm very local here to the Coeur d'Alene, like Kootenai County area. And we both have offices downtown Coeur d'Alene. So, a lot of roots here. But I think one of the things that I've run into it myself, and I know my clients have too, is when you're self employed and you're getting a loan on a home, there's so many questions, right? So I imagine you get this all the time. It's like
Oh, yeah.
all the usual suspects, but I feel like there's things that people make assumptions about, and maybe they're not necessarily true, or maybe there's different lenders that can kind of do it differently than others.
Absolutely. And a lot of the time, self employed, my first question is, what do you make? What is your income?
Mm-hmm.
What kind of tax return do you file? And probably 50% of the time, they don't know.
Okay.
They don't know if they're Schedule C, if they're sole proprietor, if they're LLC. They don't know if they get pay stubs, which you can if you're self employed, be salaried and stuff like that. So it's doing a lot of education and discovering what they don't know sometimes.
Right.
So that's, kind of
It's half the battle, right?
half the battle.
Let me, my first question is, what's the difference between a traditional loan versus a non-QM or qualified mortgage loan for self-employed people?
So traditional loans is your regular conventional FHA, VA, those kind of loans that people hear about all the time. Non-traditional loans are non-qualified mortgages. I like to describe them in the middle of traditional loans and private money. So they're not as expensive as private money, but they're more lenient on a lot of things and offer different programs if you don't fit in the box of the traditional.
Okay.
Full document tax returns, with conventional and those loans.
Okay.
And non-QM loans have that alternative documentation.
So because they're more lenient, does that mean the rates are not as great, or are there other negatives?
It depends. I've had loans that we compared both.
Mm-hmm.
And because we always want to start with their tax returns, we want to see if they can go conventional or FHA or one of those other full doc options, because it is better rates, typically lower closing costs, lower potential for down payment. The non-QM loans are going to require at least 10% equity. So that's if a purchase or a refi, you can do them for both.
Okay.
So, but
Okay.
closing costs are going to be higher. And the rate, actually had one where they were putting a lot of money down and conventional rates were pretty up there. And it was only 1/4% higher.
Okay.
So not always are they going to be so drastically different, but it is going to be a little higher.
So it's like the typical answer is, well, it depends, right?
It does depend. Yeah.
It depends.
Yes.
On a lot of things. On the borrower themselves,
Yes.
right? And their situation.
One of my favorite questions, is what's my rate? What's the rate today? Because there's so many calculations that goes into an interest rate, and it's not a one size fits all. And especially with being a broker, we have over 100 investors. So we don't just have one rate. We can shop it around, and somebody may have the exact same product, even on these non-QM loans, and have a whole different, 0.5% or so interest rate.
Mm-hmm.
So
Okay. Okay, so my next question is how far in advance should a self-employed buyer start preparing to apply for a mortgage? How much
As
advance?
early as possible, especially if you think you're going to become self-employed. It's important to know how that income is calculated, and we can show them all that. It's, not cut and dry. So a wage earner, you're going to have your gross income, your tax returns. They don't care what you paid, in taxes. It gets based on the prior number, not with self-employment. With self-employment, it's based on your net income. So minus your expenses, your deductions. So that number that people see in that top line that looks really impressive is not the income that we get to give them.
Right. Okay. Yep, I remember that last time I bought. Okay, so if the income fluctuates year to year, which is usually the case with someone self-employed, you might have a great year or 2 or 5, and then you have a bad year. So how does that work?
So no matter what loan type, we still have to pay attention to declining income. And, the last few years have been challenging for some. Some have had better years than others. But if your bank statements show declining deposits, even with that loan, we may have an issue with it. So we want to make sure that they are keeping track of their expenses, their income, especially the credit, and kind of predict this is what my year is going to look like and plan for it now so that if next year gets better, because we have to pull in potentially 2 years of an average, even if we're doing a conventional loan, sometimes 1 year. So if you have a lower year and a better year, and it's requiring that 2-year average, then it's going to bring you down from the previous year.
Right.
So all of that, if you know how to plan it, what loan type we're going with, then it's sooner
The better.
your numbers, the better.
Okay. Okay, what about specific strategies to make their application stronger?
So kind of what we were just talking about, knowing your income, knowing your debt. A big one for business owners is when they have business debt. It can be really challenging to exclude that debt. So I would say probably maybe a little over half of the self-employment applications have business debt, car payment or something. And just because the business pays that payment, there's other factors that go into it. So we want to look for them on the tax returns, or if it's a bank statement loan, it's not as big of a deal. That's structured differently. But if you are trying to go full doc, make sure the debt is on the tax returns. Pay attention to who's on the note of the debt and who's paying the debt. So if it's a mortgage and it's titled to an individual, but the mortgage is in the individual's name, but titled to an entity, and they're trying to exclude that by paid by others, that's going to be problematic. So that can be a deal killer.
Well, that kind of leads into my next question, which is what are some of the mistakes people make when they're self-employed, and like what do you see on a regular?
That one is probably the biggest one, or not consistently paying or making, I just gave myself a $5,000 raise a month ago. Those kind of things that they think they're doing it right. We would have to talk about ahead of time so that they know this is what you need to do in order to do that. Because you can get those things done and accounted for, but you have to do it in a certain way.
Okay. And then how does someone choose what lender to go with? I mean, obviously, we're sitting here. We want them to call you. We're going to give your info at the end. But what are some things that people should be asking or looking out for when they're choosing a lender?
Well, you definitely want to not rely on everything you read on the internet and use that as your basis to ask a lender questions, because if you don't know what they don't know. So they may sound like they know what they're talking about, but with bank statement loans, they've actually been around since, probably 2014. A lot of these programs have, but they're just coming into the market now with a lot of lenders because of the changes. The market has shifted, and it's not a viable way for self-employed to get loans sometimes. So they may say they know what they're doing, and then you get into it, because I've had some come to me and then, they don't qualify but it's something that if you knew what to look for from day one, they wouldn't have been put through that process. And interest rates vary drastically from lender to lender sometimes too. I've had the exact same criteria quoting a whole % higher interest rate or double the closing costs and things like that. So we have control over our fees to an extent. So we don't have, corporate telling us what we have to charge. So that's a little...
One of the nuances of
Right.
a mortgage broker versus a bank or credit union, right?
Which I love all lenders. I'm not saying anything about,
Yeah.
It's just the way that things have to be done with some of them can vary. And we all do something similar. We just do it differently. So making sure somebody knows the program and guidelines is essential, and actually reading through it and not, taking copies of everything and, oh, you have a 700 credit score, you're good. Because that's one factor. But there's, all these other things to look at.
Okay, what about the difference of LLC, S Corp, sole proprietor? How does that affect the application?
So they're all still going to be calculated with self-employment income. A big question I get a lot is, oh, I'm an independent contractor, so I'm not self-employed, or the gig, all those people. Some of them are W-2'd or go from one to the other. I've seen both, but it's still considered self-employment. So especially with young kids, there's a lot of kids that are self-employed and they don't know what a tax return is or how to file it, or a Schedule C. Oh, I had to track my mileage, or, all that stuff. So definitely talking to someone like that in the beginning and advising them to sit down with their CPA and get it all dialed in, so you know what you're needing to account for, because you can't go back a year later and say, well, now I'm going to go back and do my mileage. How are you going to do that?
Right.
So, and that's, can be a plus on your tax returns. So,
yeah. Okay. Well, I know I went out of order on some of these, but I'm going to back up here. So what are some of the biggest challenges that people are facing when they are going for a loan, when they're self-employed?
Definitely the proof of income is always a problem. I maybe have a handful of people over the last 20 years that actually know what their income is. Every time, for the most part, I think they think that it's that big number, like I said, or little number. Sometimes it's not big. But
it's all relative.
Yeah, exactly. Especially lately. But, they just don't know. They don't know, even when I go through bank statements, I'm like, how much are you spending a month? I don't know. I don't have a down payment, but there's $500 of Starbucks and things like that. So just sometimes having directive from someone who's outside of your situation and guiding you, okay, well, pay attention to this, is going to make or break because you can plan for your tax returns. Once they're filed, you can't really go back and amend them unless there's a valid reason. And that's another thing people always say is once they know what their income is, they're like, well, I'll just go amend my taxes. So that's not, talk to your CPA about that, but not always a good idea to do that.
Right. And then debt to income factors in, right? So how should the borrower be looking at that?
So trying really hard to separate personal from business, because a lot of people have, let's say we're going with a bank statement loan and they get Venmo payments or things like that, and they have a business account and a personal account. We can still use that, a personal and a business account, but for them, it's a lot harder for them to even know where they are because they're commingling funds. So it's best to separate everything. Have a business account, have a personal account if you can, and but some people don't. Some people are sole proprietors. They operate in their own individual name and use a personal account for business. So that's a good on a bank statement loan. But, when you're trying to prove, for example, the debts, which is always a revolving question that comes up, if it's on a personal bank statement that's used for business, we're not going to be able to exclude that because it's paid by you individually, unless it says it's a business account. So.
Well, and I think that kind of touches on the next question. How is a mortgage process different for self-employed versus the W-2 employees?
So W-2 or wage earners, your salary, your hourly, you get a paycheck from your boss and you go home, file your taxes. self-employed the tax returns are not cut and dry. There's pluses and minuses and deductions and additions, and it's kind of a complicated calculation. So, for example, last week I had one that had a $200 something thousand loss on their K1. But by the time we analyzed the tax returns and did the calculations, and they're also turned down by another lender, by the way. And they said, you have a business loss. They didn't, because there was things that we could add back into the income.
Okay.
So it went from them not qualifying with wherever they were to qualifying because we understand tax returns. You know, we own a business, we're self-employed, so we understand how that process works. And looking through everything, it did appear that they were not going to qualify, but they did.
Okay.
We ended up reversing that to about $19,000 a month.
Nice.
So, yeah, it was. You just
Just
got to look
by
through.
being able to add back in the allowable
Exactly.
items. Yeah. Okay. Awesome. That's great. Okay. What's the minimum amount of time someone needs to be self-employed before they can qualify for a loan?
So 1 year with some programs. 2, if you're newly self-employed and your tax returns show income. 2 years, if you haven't been self-employed for longer than 5 years, then typically we have to have a 2-year tax return with those programs. But with a bank statement or non-QM, you can be as little as 1 year. I did get an exception for someone last year that had been self-employed for 10 months.
See, this is so interesting because I just always thought it was 2 years. Hard no if you're not in business 2 years or more, and not even in business, but you have 2 years of tax returns to turn in, which means you're in business probably at least 2 years and a quarter, right? So that makes it tough, and also if you start it, maybe some people start January 1st, but a lot of people maybe they started in July or October or something. So your first year tax returns
are low.
And then year 2 is really your first full year.
Right. We do look at the incorporation date, so that can kind of get situated, but a lot of lenders do require 2 years, period. So that's up to them because they can have overlays. Guidelines, Fannie Mae, Freddie Mac, we pretty much try to stick to whatever that says. So, and we try to run it through simultaneously. So if there's Fannie Mae and Freddie Mac, run it through both because you may get different results. So for example, I had one return, just 1 year tax returns, and the other one say we needed 2. So that could be the deciding factor between qualifying for more or qualifying for less.
Okay.
So.
Okay. Interesting. Something that just dawned on me, some people might be getting confused. So can you explain the difference between a bank statement loan and stated income loan? Like back in the day, there was the stated income loans, right? And people, everyone's eyes get big. So
I have another fun one with that. So I remember someone that worked at a fast food restaurant. They were a manager, made decent income. And back then, this was 2005 probably, he wanted to state his income to get qualified for a higher house. And I said, well, I still want to see your tax returns and your income and all that. And I told him, you don't qualify. I don't think it's wise to say you make more income, even though the program was available. And you could totally do that back then. And someone else did do the loan for him, but 2 years later he called me and he was in foreclosure. So it's no wonder that particular program is not here, at least structured that way. There are ways that you can do stated income-ish type programs, but that's a whole nother.
But a bank statement loan is you're looking.
So that one, it's not stated. What it will do is it takes the deposits in the bank account, and let's say it's $100,000 for the year. Then it's depending on the expense factor of the business. Then we can use 50% of the deposits, or 60 or 70, whatever their expense factor is, and convert that to income. So, and we're not stating the income. It's calculated by eligible deposits.
Got it. Okay. All right. And then what docs do self-employed people need to be prepared that you're going to be asking for?
We always still want to start with the 2-year full everything.
Mm-hmm.
Even if it looks terrible and they know they're not, they know their income. We still want to start there and look at that and show them, here's how this is calculated.
Mm-hmm.
Maybe next year, see if there's a different way to deduct this or that or whatever.
Mm-hmm.
And then if they don't qualify for that, then we look at these alternative options. And they have P&L loans, so it's a profit and loss statement.
Mm-hmm.
We can do 1099 only. The bank statement is probably the best out of those because we've seen more favorable rates on
Mm-hmm.
those. And the P&Ls can be eligible, but if that's not going to be a healthy P&L, it's not going to work.
Mm-hmm.
So that's usually why we
Okay.
end up back at the bank statement loan.
Okay. And then talk a little bit about, so it's something that I see on a regular, and I feel like it's getting more and more common, not just because of the economy, but also people are just used to doing these little side hustles. Maybe you do Lyft, or maybe you do, I don't know, one of the other,
All
Uber or
of them.
something,
Yeah.
all of the above. You've got this
DoorDash and yeah.
gig economy going on, right? So maybe instead of just two traditional W-2 wage earners, maybe you do still have some W-2. Maybe you've got one or two little side hustles, and then the spouse might have one or both of those. So can you address that?
That's really common right now, especially with the younger crowd. And I say younger, my daughter's 23, her age group, they do not want to have one job.
Mm-hmm.
They need 2 jobs at all times, or even 3 sometimes. So that income, depending if it's W-2 or not, still has to have that 2-year average because it's variable income.
Mm-hmm.
So the 2-year average, if it's W-2, as long as you've been there for 2 years, we can average it out. If it's part-time and you've only been there a year, we can't use that because it has to have that 2-year average. So, and if it's 1099, which some of these are,
Right.
then
Actually,
that's
a lot of them are.
mhm,
Yeah.
then that's going to be that self-employment category. And
Right.
sometimes self-employment income does pan out. It does calculate. It's just been a little harder for people the last couple years.
Mm-hmm.
So it depends on how everything kind of pans out on your tax returns. And right now is the perfect time, if you've already filed, to think about next year's taxes and looking at this year's if they don't work.
Mm-hmm.
Or if you didn't know, a lot of people do not know they file a Schedule C.
Mm-hmm.
And when we look at their tax returns, I'm like, you're self-employed. Yeah, but they're like, what's a Schedule C? So that's not out of the realm of possibility. We can definitely still use multiple jobs.
Okay.
Yeah.
Awesome. Okay. Is there anything that I didn't touch on that you wanted to make sure we
Let me
went
read
over?
my notes here.
Yeah, and the thing is, so what I will say while you're doing that is what I find, I think is kind of common is people, especially self-employed people who have a business, they're busy, right? Everyone's busy. I mean, we're all busy, but when you have these questions and it's something that you're wanting to do, it's a life goal, and maybe you've bought in the past, maybe you haven't, but for whatever reason, the market conditions right now, not going to lie, they're tough for a lot of people. So it's actually why I'm doing this, because I feel like maybe there's, some myths that we're dispelling. Maybe it's not as bad as people think.
Right.
Maybe if they tweak this or that, then it changes everything and changes their situation. So if they're educated and they know, okay, well, maybe I can't do it right now this minute, but maybe I can do it in 6 months or on the next tax return, next year, this time next year.
Oh, that actually reminded me. We do have a bank statement with as little as 3 months. Now, the rate is higher, but that's good for seasonal people.
Okay.
And we're in a seasonal town, so some of the jobs are not, all year round. So that is another option, 3 months, 6 months, because if you have 12 full months and you have only income here, it looks like your income's going down.
Right.
So timing those,
That's
is
interesting.
another option too.
Okay.
Yeah. I mean, there's all kinds of things that we can hit on and go over that I think
Right.
people don't be like, I'm scared, I don't want to look into it, because if it's something positive that you didn't even know existed, then you don't have to wait sometimes. And sometimes that happens and people are like, I could not believe I qualified,
Yeah.
and if you do go into a bank, which a lot of people have that relationship and they just think this is the best place to get a loan, I'm going to go in there, do my deposits and talk to someone. And then they look at their tax returns that have a true loss, and they just say, no, we can't help you. And that's not their fault. That's just what they offer. So just because one lender says no, don't always go with that. Try to get a second opinion.
Yeah, and I think that's was my point, is what I'm getting at is to be informed, right? So even if you really are in a situation where it's not going to work right now this minute, I think it's so much wiser to have a game plan. And until you sit down, I can't tell you, I'm a realtor, right? So I'm out there, boots on the ground. I'm talking to people. They're calling me, or we're at an open house or whatever. And they haven't talked to the lender yet if they need to get a loan. Not everyone does. Some people are buying with cash. But for anyone who does need to go get a loan for whatever amount, whether it's 50% or 80%, or some of the loans, first-time home buyers, or you can get into FHA for, what is it, 3.5% or something?
Right.
5% is conventional minimum, 5%.
Some is
down.
3. And we did at one point have a 1% down with a 2% grant. So there's always, and hopefully we see some more opportunities like that that make things more affordable. Because even for people that do have money, it is still challenging.
Right.
And
but that's my point is, just with that topic, a lot of people don't know. They think, oh, I have to have my 20% down before I can pull the trigger on anything. And maybe they've got the 5 or 10%, but they just, because they're busy with their own life and their job and, all the things. So it's just, I feel like it's not just business planning for your business, but it's, your life goals, and to at least get a game plan together and know, okay, my next step is in 3 months, or when I get to X amount, then we can pull the trigger on this other thing. So
exactly, because planning even 3 months out can mean a difference of you getting something a little bit more expensive, or just not last minute, because then you get disappointed. And that sometimes those people fall off because they found a house they love and they can't qualify right now, and then you tell them that, or okay, let's plan on it. I mean, I've had clients that I've worked with for 3 years, 4 years, and it took that long sometimes. But that's okay, because if that's your goal, then we'll do whatever it takes to work with you and stick with you and give you the education that you need. And you can text us, you can call us. It's not like a 9 to 5. You're the same way. We just, whatever you need.
Right. Well, and I think sometimes there's maybe other creative things that people can think about doing that they didn't consider.
Right.
Like one, I'm a fan of, maybe you buy a duplex or a fourplex. You own or occupy, so you're going to live in one.
Right.
Does everyone want to live in that situation? No. But does it have to be forever? No.
Right.
Now, all of a sudden, you have a primary resident situation, but which means you have better rates than if you were to just go buy an investment property that you don't live in, right? And then for a period of time, you're, what is it, a year, 2 years, or whatever. And then you can move on to your next thing, but now all of a sudden you have this amazing opportunity.
I actually have a client that did just that, and they own a duplex, self-employed. We've been working on it for a year, so that was their plan, is we're going to live in this for a couple years, knowing it's not our forever, fix it up a little bit, and they are able to almost double the house that they paid for with the duplex, keep that, rent it out, and have that offset the new house payment. So, and with a bank statement loan. So
it's an awesome plan.
Yeah.
I feel like it's shocking to me, actually, that people don't do that more. But in this area, it's actually kind of tough because
can be.
there's just not a lot of the category is like small multifamily, right? So the lending rules change, is my understanding. So correct me or speak to this a little. My understanding is if it's 4 units or under, you can get a loan like any other loan on a regular single family home, right? But if it's 5 units or more, now that's a commercial loan, all different rules.
Correct.
So you can't do what we just talked about. Is that
so
right?
yes, and we do have commercial options. We do have some stated commercial options for commercial properties, and with the duplex, you can do, or up to fourplex, I should say. You can do FHA, you can do all those. There was a lot of advertising going around that said become an investor for as little as 5% down. Did you see those?
No.
So that was regarding the change with Fannie Mae's guidelines, because you always need a 15% down on a multifamily, even if it was your primary. Well, they changed that, and people were calling like all day for a couple of weeks. Like, I can get an investment property for 5%. What that very misleading advertise was saying, and it was from someone I won't name who mortgage. No, they in the very fine details, it has to be your primary residence, so you had to move into it, live in it, and then you could become an investor that way. But yeah, that was fun to explain.
And not everyone wants to be a landlord, right? So that does not fit the bill for everybody. But for someone who is willing to, live for a period of time in that scenario, I mean, why not? Our area just does not have a lot of inventory with small multifamily. They go kind of quickly, or they're very high priced, and so people aren't willing to do it. But anyway, this is just one of those things that if that little tidbit, if that is your new plan, like now all of a sudden we just changed someone's life, right? Like we
do that a lot.
Yeah.
Because I don't take no. So, if I see something incredibly challenging, or someone comes to you and they want something totally out of possibility, we try to educate and show them, well, this isn't doable, but this is doable. Because sometimes people just need someone to tell them because they don't know, or they just want someone to tell them. And then once you tell them kind of what you should be doing, then they're okay with it.
Yeah. Well, and I think you make different decisions too, based on those goals, whether they're new goals or old goals. But if it's top of mind and you're like, oh, maybe I won't take that big trip to wherever,
right?
Because that's going to be 10 or 20 grand or something, and it moves you closer to your goal. Where if you don't really know what you're going after, it's just going to take you so much longer to get there.
Right.
I'm big on goals right now.
Yes.
I have, changed my fitness and my health, and it's top of mind, but it applies to so many areas of life. It's not just health.
And you have to know your goals, or you won't know where you want to go or how to get there. So if you don't tell your time where to go, your money where to go, your friends where to go, if you need to work, I can't go tonight, whatever, it changes, like you said, it changes everything.
Yeah.
I knew what I want, and it was always in my head, but I never put it down into goals. And when I started doing that, thanks to my business coach, it changed everything personally, things that I didn't even think it was going to affect. And I didn't realize it until I started putting it into play, and everything else was falling into place. So that's the same thing with home ownership or anything else. And there's a lot of positives right now with home ownership. It's not doom or gloom every day. And people are still buying and selling. So don't, just look at Google and your taxes and your insurance and everything that represents, because that's not it. Here in Idaho, we bill based off of the current tax bill. So if you're, on Zillow's calculator or something like that, and it says this house is going to be $400 a month, and we pull the tax bill and it's $250, then now maybe you can qualify for a little bit higher price, because we're looking at each individual property when we do an estimate for people. So sometimes you qualify for more that way, sometimes it's less.
Yeah.
So,
well, and also again, we're here doing this because we want to help people in their situation, right? Like, we're not getting paid for putting all this information out or whatever. I mean, I guess indirectly we are, assuming
He's paying
people,
us. Yeah.
people are, going to contact us and get our help. But I just feel like being informed, like, that's everything. And one of the things I think people are confused about, or it makes them hesitate, like, I remember doing open houses and just hearing over and over and over again before the election. So, like, let's say last summer. Oh, we're going to wait and see what happens with the election. We're going to wait. We're going to wait. We're going to wait. And since the election, I feel like we're in the same boat because of this volatility. Things are, I mean, just even today, like, just bananas. And then, people are elated. And it's like this,
It's an emotional roller coaster.
It is. It's so emotional. But one of the things that I like to, besides just educating, there's some opportunities. There's always going to be an opportunity on one side or the other. Right. So yes, it's hard for buyers right now. The interest rates are high. The prices have not come down like some people thought. There was going to be a big crash, and it just. I mean, I've been doing this in this area since 2017, and literally, there's always people that think like, oh, these prices are so high. There's just no way they can go higher. And look where they are from now to 2017. But my point is, like, right now, the opportunity, in my humble opinion, for a buyer who's qualified, they've done all the legwork, we know what the number, the target is let's go make some offers on things, let's find the properties you love and get some options. And then you make some offers, and you don't have to offer full price, number one. You can ask for concessions, number two, right? Maybe you're going for a lesser home than you thought, so you're going to sacrifice a little bit, but at least you'll get in the game instead of being not in the game and here 2 years later or 5 years later you're still waiting.
Oh yeah. During COVID, there was probably 100 people per house. It was crazy.
It was.
And out of those people, I would routinely talk to people that said, oh, they're just going to keep going down, I'm going to wait. And that was when they were already in the twos. And I think the lowest I ever locked in was 1.5.
Oh my God.
Yeah. So, I mean, rates were insane, crazy. But that also, there was a lot of negative to the market because first-time home buyers hardly had any chances. Houses were going way over list price, no concessions, no inspections. Sure, we'll give you this house, but we want a 10-day close. You can't do an appraisal. You can't do an inspection. The negotiations were people not protecting people.
Right.
Or they felt like pressured to get this house, which wasn't ideal because they thought, I'm never going to be able to get one again.
Yeah.
But now it's created a totally different problem with the low interest rates because a lot of those people don't want to sell, or it's an Airbnb or something like that. So they're holding that inventory kind of hostage right now. But psychologically, a lot of those people, because we become therapists, we know everything. People tell us things that I'm like, I do not want to know that.
Yeah, right.
But
that's another topic. Wouldn't that be a fun one?
Oh, we should do one with all the stories.
I've heard people, like learning they got cheated on because they were going for a home loan. Or
oh yes, I've been in. I've had that happen. Okay, I won't say it right now. That's a different one. But a lot of those negative people say, well, I only thought that because I didn't think I had a chance. I didn't think I could qualify. I didn't think I could get that house. So just.
Yeah, that's my point is, like, there's opportunities out there because it's harder. For sellers, if their house is listed, like, they do want to sell their house. So maybe they're not going to get what they thought, or maybe they are going to, maybe they refused a few offers, but another one comes in and they waited long enough and now they have to go do something that they weren't willing to do a month or two ago, when they first listed. So
do you still see a disconnect with sellers and buyers? Do they still think my house is worth, $1 million, and they're like, oh, it's worth like $3 million? So,
It is funny. It's a kind of, there's a lot of psychology, and obviously we're going to look at stats and the numbers and what the market is doing in that neighborhood. But,
Yep.
Things fluctuate and people have different life circumstances. So that's a big factor right there. What they're, are they going to just wait it out regardless and because they want their price? Some people can do that and they're fine to do that. They're not going to move on until they get their price. Other people, they got to sell it in a month.
Yeah.
And so obviously that's going to change their decision on if an offer comes in, under what they wanted, right? They might be willing to make some concessions. And one thing for buyers who, they're just in this pickle and they think there's no options. The builders, if you're buying new construction, one, you're getting a new construction home, and so you're not as worried about things breaking down or having to replace the HVAC a year after you move in. But also the builders they have an appetite to sell that house, and so they will give concessions now that you weren't seeing back when things were going bananas. Buyers were on a waiting list. It's like, you're lucky if you can buy my house,
right?
And so since that's, things have turned around in that way, I just feel like there really are opportunities for someone who's a solid buyer and they've got all their ducks in a row. You have some power in that situation, in that scenario.
Absolutely. And even, I would say more so, the challenging files have been more prevalent to where we're being, okay, let's see if mom and dad can co-sign. Let's see if grandma can. Let's, just a whole bunch of different ways that we can structure things and barely making it fit, and that's just the reality for some people is they're barely making it work, but barely making it work is still making it work.
Yeah.
And we're not going to approve a loan that's, you can't afford. That's just kind of, gone out of the window. The debt ratios are dependent upon, different programs, but sometimes we're not able to count that extra income from that part-time job. So that isn't figured into your loan, but into your household it is. So we can do two different calculations, one with your actual real household income, take-home income, how much is your Starbucks? How much is your Spotify? All those invisible bills that aren't on the credit report. And then what's the loan application going to do? Because that's your gross income or net if it's self-employed, and then your credit report. So the numbers are two totally different aspects. So we like to go over both and make sure they're comfortable with that payment because it's two different calculations. And sometimes people don't know.
Yeah.
They're like, show me a house. You're like, well, how much can you afford? I don't know.
Yeah.
So...
Yeah, and so, I will help people, but it's really thing one. So for someone out there looking and they want to, get the process started, yes, call me. I would love for you to, let's at least get it on the radar of what you're looking for. But this is the big question. Are we looking at a $400,000 home or a $550 home?
Yes.
Yeah, so it's a big difference.
And those car dealership psychologies. They, or the model homes, they have everything all staged and beautiful and all that stuff where they show you the expensive car first and then you don't want that one. So don't do that to yourself. Find out what you can afford, have realistic expectations so that you don't get disappointed.
Yeah. And have a plan.
Yeah, have a plan. Have a plan, have goals, have us. Because we'll help with all that.
Okay, this is awesome. Thanks. Great talk. Did we miss anything?
I don't think so.
Okay.
No.
And then how can people get in touch with you if they want to get the process started?
So I will have her throw on a QR code for you guys. And thanks for watching. And we look forward to helping you get at home in Idaho.
Yay. That was a plug because the company name is At Home CDA.
At Home Landing.
At Home Landing CDA, right? Mine is destinationliving.co. So everyone knows how to get in touch. And thanks so much. I appreciate the time.
Yeah, absolutely.
All right. Take care.
Bye.
Bye.